Hi, welcome to the Capital Pulse. I'm Jeff Hogan and I'm your host. Today we're going to be dealing with why you should always buy commercial real estate when you're buying a business, even if you don't want to. So, what's the biggest villain today when a new business owner purchases a business? It's the debt service pressure. You buy a great business for $1 million with an SBA loan, and because it's a standard acquisition, the bank basically puts you on a 10-year leash. The massive monthly payments leave you zero room for arrow, zero room for marketing, and zero room for a bad month. But what if I told you there's a legal time machine that can cut your monthly payment by almost 40% overnight? Today, we're going to be talking about the 25-year stretch, the term of the loan. So, what's the insight? Here's the banker's secret. Most people miss SBA loans and don't understand that the SBA loans are based upon use of proceeds. So, the use of proceeds on an acquisition business, 10-year term. Real estate, 25-year term. The magic trick, if you combine the purchase of a business with the purchase of a commercial real estate or even the current facility you're leasing, and that real estate makes up the majority of the loan value, the SBA allows the lender to stretch that entire loan out, including the goodwill and the working capital, out to 25 years. So, why does that matter? Let's look at the math on a $2 million deal. On a $2 million deal with a 10-year term at 9% interest, your payment is going to be approximately $26,000 a month. That's a big nut to crack every month. Like I said, you don't have any room for error or a bad month down. So, on a 25-year stretched term, the same debt drops down to roughly $17,700 a month. That's an $8,300 a month in found money that infects your cash flow. That's cash flow money that gets back in your pocket or you can reinvest into your business. So you aren't just buying a building, you're basically buying cash flow insurance for your business. So what's the plan? Stick with the 25-year rule if you can. To off, pull this off in 2026, you need to follow the 51% rule. Basically, occupancy. Your business must occupy at least 51% of the building you're buying. You can't buy a strip mall or an office building and just stick your office in the middle of it and just take it. It's got to be 51%. Also, remember the weighted averages. As your guide, I hope you structure the use of proceeds so the real estate is the anchor on the deal. If the real estate portion is large enough, the lender can justify going out to 25 years for the whole package. If the business is a larger portion, we can still extend it out past the 10 years and we get a blended rate on the thing. Also, understand that on a purchase of a business and lease and own, you're going to need to put the lease together for the location of the business up to 10 years. So they tie you in at a location that you may or may not serve you best. So you have to have the 10-year option of being able to lease that location for the duration of the loan. So, what is your action plan? Don't sign a lease yet. If you're buying a business, ask the landlord if they're willing to sell the business. If not, go look for a building that will compensate or work for yourself in owning that business. Also, check the 51% rule. Ensure the square footage works for the owner occupied requirement. That's going to be a key factor in this thing. Stop thinking like a tenant and start thinking like an owner user, business owner. The 25-year stretch also helps bolster your balance sheet and makes it look stronger because now you have real estate and the value of the business goes up. And the 25-year stretch is the single best way to protect your business in a volatile economy because you lock in your occupancy cost and you don't have to fight every 3 to 5 years to renegotiate the lease and a knife fight over the last dollar on the table with your landlord. So I've created a 10-year versus a 25-year cash flow calculator. So you can see exactly how much you're going to be able to and what afford, as well as breathing room so that you can make your moves Link. So why don't you go ahead and put a comment down below or reach out to me, and I'll be more than happy to get you a capital, give you an idea of what that takes. So once again, I'm Jeff Hogan. This is the Capital Pulse. So always keep your keep your finger on the pulse and keep it steady. I'll see you tomorrow.